Somebody was talking about their system and how it predicts the future, and he goes, all predictions are about the future. A lot of shit can happen between now and then. Or one day is Thursday, May 15th, 2025. This is the week and charts. Obviously, I want to thank all you guys and girls for attending today. We talk about current market conditions. Obviously, I have a lot to say about that. Your questions are trading your favorite stock and crypto picks. Start thinking about those now and punching them in. I want to talk about a few things. I want to talk about mystery charts. We've got some updates there. I want to talk a little bit about V-shaped recoveries and how there's a paradox with those guys. A quick 10% TFM 10% update, a little bit about the Landry 100, and then I want to continue my series on how a million little things will make you a successful trader. There's a disclaimer screen. As you know, you can lose money trading, or as often summing up, all predictions are about the future, and a lot of stuff can happen between now and then. I stole that from Greg Morris. He was sitting next to me at a conference once. Somebody was talking about their system and how it predicts the future, and he goes, all predictions are about the future. A lot of shit can happen between now and then. Anyway, there's all my contact information. You can also reach me at davelandry.com. The newest thing on here is my Substack, which I'm pretty excited about. That's a really neat platform, and I think it works best. It works good, I should say, for the publisher and for the people on the other end. It's really cool, and I've been enjoying using it. I was talking with somebody else, and they're getting into some other things on Substack too, some non-trading related things. But anyway, really excited about Substack, at least at the moment. All right, let's talk about the mystery charts and the methodology and action. This is the TFPM, which was a gold stock from not that long ago, and I wanted to just show you that there was some persistency in this chart, but there was a lot of acceleration going into the setup, and we had a Landry light pullback, which I'll give you the rules to that toward the end of the presentation. Anyway, you can see the parameters down below: entry, protective stop, IPT, that's initial profit target. And this is what it's looked like so far. It triggered, but then unfortunately it's come back in. So far it hasn't stopped out though, so we'll see what happens. Hopefully, at worst, it'll become better than the poking eye trade, but it doesn't look so hot just yet. Today, it's a tiny bit of a bounce, better than the poking eye, I suppose. CCL, another one of these mystery charts. You can see that it was still headed higher based on the Landry proper order down here, which is 10 simple greater than 20 exponential greater than 30 exponential moving averages. But notice that it was trading sideways, and then it went back to uptrend proper order, made all-time highs, but came right back in. And then we had the bow tie, where the proper order switches or flips from uptrend proper order to downtrend proper order, giving the appearance, obviously, of a bow tie. And then you look to get in on the first pullback. It could be as little as a 1-bar pullback after that. Entry's there, stop was there, initial profit target was here. And then when you hit the initial profit target, you bring your stop down to break even. And then as the market moves more and more in your favor, you trail that stop lower. And we got stopped out on this gap. And this is how it turned out. Better than a poke in the eye. If every trade you made did this well, you'd be pretty wealthy. But anyway, the ultimate goal is to make a lot of money on that second low, 100%, 200%, 300%, sometimes even 500%. Obviously, that doesn't happen every day. That's why you have to grind it out. $1,000 in the first low, based on a 100K account, or 1%, if we want to look at that. And then hopefully something much bigger on the second. In this case, it did not, but a 1.4% gain over a relatively short period of time is better than the poke in the eye. When it comes to market timing, as I preach, it's less about beating the market and more about not letting the market beat you. And as I've said quite a bit, the diaper change is when the market has these really crazy sell-offs, and I'm borrowing that term from Ian McActivey. And we've had a little spell recently. It's kind of pales in comparison to historical drop-offs, but it's been a pretty significant drop nonetheless. Down below, this is a percent away from the 50-week closing high, which the system is based on. You can see 50% drawdowns are really not that uncommon, and that's the scary part when it comes to markets. And nobody wants to believe that. But I've seen several in my lifetime, and I'm old, but I'm not that old. So it does happen. There's the rules. I'm not going to bore you with the rules since we talk about it every week. But that was the last sell right there. Unfortunately, if you're trading a system, however you want to look at it, the market has come right back so far, at least, which would be a good thing. In fact, we now have one bar of Landry light, the low is greater than that 50-week moving average, and we need two for a signal. So next Friday, we could actually have a buy signal with this. So this is a V-shaped recovery, and I ran out of time. But one of my clients was talking to me about overhead resistance. He thinks I spend too much time thinking about it or worrying about it or possibly missing opportunities because of it. And I defended my position on that simply because it's just human nature. And I'm going to show you some of that human nature in just one second. And then next week, I'll flesh out more of my answer, which I published to, I think I published to Twitter and to Substack. But anyway, so nice big V-shaped recovery so far. So market timing doesn't really work when you have a V-shaped recovery. The ultimate goal of market timing is to avoid the diaper change moment. So it doesn't really work well with the V-shaped recovery. Spoiler alert, or does it? Anyway, so if you take a look at the pandemic sell signal back in 2020, so in February 27, the market began to take the pandemic fairly seriously, and then it began to tumble afterwards. Now, if we take a look at that sell signal, you were out right there. That's February 27th. And then you got a buy signal in July, okay? So you're actually getting back in higher than you got out. So technically, that would be known as a whipsaw. So let's take a look at that in a little bit more detail. We zoom that in. You got out at 30.46, and then you got back in at 32.25. So that's 179 points you gave up by not just staying in. If you just stayed in, you would be 6% ahead, right? So this was an opportunity cost, so to speak, or a whipsaw, and a whipsaw. But you avoided nearly a 30% diaper change moment. And the story I've told many times. A friend of mine was passing through town, and they have a place not too far from here now, about an hour away or so. But before they had the place, they would kind of use our house as home base to visit his son, who lives in our town. And he was kind of white as a ghost when this market kept dropping, looking at the ticker on the screen. And he wasn't sleeping at night. He's retired now, but he was nearing retirement. He was only a few years out from retirement at the time, and he was not doing well at this time. So yeah, there was an opportunity cost, a fairly significant opportunity cost miss, right? But you're also able to sleep at night, and there's no guarantee that 28% couldn't have turned into a 50% loss. And you know, a lot of times when I'm talking about market timing, I go way back to the 20s and all, and the 70s, which were abysmal too. But even in more recent times, the market has lost more than half of its value. And go back to 2000, the NASDAQ lost 72% of its value, to show you how serious this could be. And the recovery times, I think the 2008 recovery, or one of those recoveries, we could back up to the charts, but one of those recoveries took, I think, 13 years. And, you know, my friends my age, a little older, 13 years when you're pretty damn close to retirement is a long time to wait for your money to come back. You might need your money in the meantime. So I still think the system, I'm defending my system, which is a free system, but I'm defending it it did its job, okay? It got you out of the way. Now, did it get you back in? It got you back in a little bit late, but that's what trend following is all about. And I think that's one of the things that my client was pointing out was like, we missed opportunities because I'm being too cautious. Well, by the way, just a side note, I do put out a Landry list every day, and the official recommendations come from that Landry list, but there were some big winners in that Landry list during this recent run, but I felt they were too risky to recommend, but I do put them out there for others. And I did take, and I'm not throwing salt in anybody's wounds, I did take some of those setups, and they weren't working fantastically, but today looks like they're nicely in the black. TLI and YALA would be two from the Landry list. Now, let me turn things on its head. So I said that systems don't work or market timing doesn't work when the market makes a big V-shaped recovery. You get out, market spikes down and then spikes right back up. Well, as I just said, you do avoid that spike down, which allows you to sleep at night. You just get back in a little bit later, which again, opportunity cost. So I've been thinking lately, maybe the reason market timing works is because sometimes it doesn't during those V-shaped recoveries. Excuse me. Now, I'm a man on the street kind of guy, and this kind of dovetails in with the overhead supply comment that was I was talking with a client about. And I think that you have to pay attention to overhead supply, and you want to stack the odds in your favor. Now, overhead supply is just a spot where people have likely bought and will likely get out when they get back to break even. And if that doesn't happen, that's when you end up having that longer term bear market, because people like my aforementioned friend eventually get forced out because he's thinking like, okay, my $1 million went to or $2 million went to $1 million, and that's beginning to erode away. And geez, I don't want to. I want to enjoy myself in retirement. I don't want to just scrape by. But again, being a man on the street in the gym, it's like a lot of the guys in there, older guys especially. I work out in the mornings, and I think Silver Sneakers, which is a healthcare plan for older people, a lot of those guys get free workouts as long as they work out. That the gym reports back to the company whether or not they worked out or not. And so there's a lot of old guys in there, present company included, I suppose. But they're saying things like it'll come back. It always comes back. Well, it always comes back, but it might take 13 years, like I just said, or it might take 25 years. And I've seen somebody make the argument, if you're a young person, the market has never had a bad 30-year period. It's like, well, okay, and who's to say it might not stretch out a little bit more than 30 years? And what if you did maybe do a little market timing? Now, if you have forever in your time horizon, you're 20 years old, maybe you need to be, I hate to say this, but maybe you could be a little bit more lax in your market timing and not worry about it so much. But I think you would do even better if you applied market timing. So think about this. If you avoid the occasional 50% drop, then you're going to have a lot more money longer term in the markets. But a lot of people, it always comes back. Well, it doesn't always come back. I mean, yeah, 25 years, it'll come back, maybe 30. And then, of course, the market always goes up longer term. One thing interesting here is after I published the Layman's Guide to Trading Stocks, where I think I talked about market myths in there, and this was one of them, market always comes back. Afterwards, Greg Morris in a presentation pointed out that there's a lot of like it's just common knowledge or whatever, that the market always goes up longer term, and it's like some pretty decent number, like 12% a year. Well, those numbers are based on like an 80-time year horizon. And like Greg pointed out, it's like, well, you're in your young 20s, you're trying to get by, you're trying to climb the corporate ladder, you're really busy, you might get married, you might have some kids, and then you're trying to get a house, and nowadays that seems harder and harder and harder. So you don't have a lot of money to put aside and put it to the market. So you might be a little older before you actually start being able to invest in the markets. So 80 years, as Sweet Brown, quoting Sweet Brown, I should say, is ain't nobody got time for that. Anyway, the sell signal here, this was back in 2008. By the way, in 2007, again, always look at the charts. It's like the market was kind of bumping along, making new highs in 2007, and right around October or so, I couldn't find a long to save my life, and I apologize to my clients for showing so many shorts, but that's all the market was providing. And you could actually go back and look at those setups. Like, well, what does Big Dave do in a bear market? Go back and look at 2008. I'm not sure how far the archives go back. I know there's a gap in them somewhere, but I think I have 2008 out there. Anyway, you can see pretty serious slide, 52% slide in the market. And I think that's after the signal. But even if it's not, you can see it's still a significant slide you would have avoided with market timing. So market timing works in kind of a perverse sense because sometimes it doesn't. It lulls people into bad behavior. And the other thing too, what you have to realize, and this is kind of a crazy thing with markets, is so far we're plowing through that overhead supply, and we might just plow through it. I hope we do, but I think you have to respect it. And even if we do plow through it, and as my client was pointing out, this has happened more than once throughout history, you're probably not getting a representative sample because you don't have enough occurrences of that. And so I still think trading in a conceptually correct manner, because human nature never changes, is important. Yeah, you might tweak things a little bit here and there, but for the most part, you should pay attention to those things. But anyway, I just want to get that out real quick. I'm not going to spend a lot of time on the Landry 100, but speculation is alive and well. And the jury's still out on how this is going to do this time. I did this years ago, as I've said 1,000 times. And the software I was using to track it was no longer available, and some other things happened, and the market just chopped around forever, and I got bored with it. But I'm going to try to stick to it this time. And there's no money management built into this. This is hypothetical, okay? Although I have taken some of the trades out of the Landry 100 personally in a small way, kind of an experimental basis. But anyway, the premise is you just buy a stock, and ideally you want a higher HV type stock, higher historical volatility stock, as it's making closing at 52-week closing highs. Now, if we were to get into an extended bear market, then maybe I drop that down to maybe as low as a 3-month high, a 90-day high. But for now, I'm still using the 52-week high for that. So all of these were bought at 52-week highs. So this was a buy here, and this thing ran 614%, and then it's had a pretty serious drop since. But I left it in because it's still, for the most part, headed higher, although it's a pretty serious drawdown. And that's what comes with longer term trend following. And that's another one of those proof of concept things. But I would highly recommend you take profits. And one of the things that I've kind of noodled with a little bit is maybe I should take profits at 100%, because this one here, that's 100%. And let's see what that TOI was. I just mentioned that one. TOI was 137%. And I probably need to be, again, taking partial profits on those. Now, the TOI in my experiment, it wasn't a whole lot. It was just kind of like an experimental basis. When it did get to 100%, I did take off half of those shares. Here's some random thoughts from several weeks ago, and I've been repeating them weekly. Momentum ends badly, as you know. Eventually, you're going to have the mother of all drawdowns, and then what appears to initially be a correction turns out to be something else. Relative strength to the bear market is okay. We had some grocery stores in there. I took them out yesterday, and some of them made a couple percent, some of them lost a couple percent. Overall, it really wasn't worth it. Some other areas did okay for a little while, but then the sell-off caught up to them. So that's the dangerous thing about trading relative strength in a bear market. Unless you have a setup that just looks absolutely fantastic, something a little bit more speculative like the TOI or something like that, then you're better off sitting on your hands. But it is a great way to see where the money's flowing. Just like recently, it's like, oh, it looks like the money's flowing to grocery stores. Well, that's obviously a defensive type of area. Money was kind of flowing into drugs for a while, then drugs kind of roll back over, obviously. So it's kind of a cool thing. And I know I'm a nerd, and you probably want to party with me, but it's fun to watch the sector rotation and the ebbs and flows. Goals, for instance, we just had a when I say we, I'd be me, myself, and I. We had a lot of goals in there, gold stock, GOLD, but those are coming out. A lot of those came out just yesterday. Cash is not trash. Also, I've done complete presentations just on that. And a lot of times people will say cash is trash. Well, sometimes return of capital is more important than return on capital. Okay, any questions or thoughts so far? Okay, continuing on. Lately, I've been doing a series for the most part each week on a million little things, and this is something that hit me, I guess maybe like a year ago or something. And trading is really a million little things. And one thing that kind of comes to mind is like a race car, okay? And when they're designing a race car, they're like, okay, we want to make this thing as light as possible. What if we took off a couple of the wheels? Would that make it lighter? Yeah, it'd make it lighter, but it would no longer run, okay? So they don't come up with these big, huge, drastic changes. They make one little change and tweak that, and they keep making another little change, and before you know it, they have a lighter and lighter car. What if we use an alloy for this one little brace here, or how big does this brace really need to be? But they're constantly noodling with that, and I love these Formula One documentaries. I've never watched an actual Formula One race, but the documentaries are fantastic. Senna, I would start by watching that one, and then watch Schumacher and anyone. And I just watched one recently, and geez, his name escapes me. It was kind of a quick one. It was about the 18-year-old driver. And spoiler alert on these things, they usually end badly. Sometimes not the way you think, but they usually end badly. But fascinating, fascinating, fascinating. Anyway, long story endless. On the one I watched recently, there's 2,000 people on a team. Okay, so you see the one little guy in the car, but there's 2,000 people behind him, the engineers and the I don't know what else, just tons and tons of work, the pit crew, tons and tons of stuff go into that Formula One racing. So and that's all that fascinates me. It really does. I don't know why I don't watch the races, but it's a very fascinating thing. Anyway, again, they make a million little things, a million little changes to on the race car, and a million little tweaks, and that's what makes a successful racer, or successful racing, I should say. Anyway, long story endless, one of the million little things I've been thinking a lot about lately is getting the reps in. Now, this is something I've talked about quite a bit, but I think it bears repeating and fleshing out a little bit more. Now, I have a friend in the gym. We'll call him Jose, and he's a nice guy, Cuban immigrant, successful, retired. Not that that means anything or has any meaning towards this presentation, but he's a good guy, and I've become really friendly with him. Fun fact, he has at least 6 fingers on his left hand. He has had 3 rotator cuff surgeries, and he jerks around the weights like a madman. He's a little bitty old fellow, and he lifts pretty heavy, but he's just throwing the weights around. It's very hard to watch. And I would be willing to bet there's a high chance that he's going to have a 4th rotator cuff surgery in the not too distant future. Since I've known him, I think he's had 1, and before that, he had 2. Now, the trainer, he doesn't work with the trainer, but the trainer's in the gym, and if the trainer sees somebody with like horrible form is going to hurt themselves, he'll say something, and sometimes I resist myself, and sometimes I can't help myself. Like there's a girl that she'll grab like 50, 60 pounds. She's not huge. She's strong, and she'll just drop almost straight to the floor and bounce straight back up. And I can hear my knees cracking when she does that. But anyway, long story endless, everybody in the gym has tried to stop Jose from just throwing the weights around. And finally, about a week ago, I just said, I just got to get to the bottom of this. I couldn't stand it. I said, Jose, how come you jerk the weights around? His answer was, because that's how I've always done it. So long story endless, the point I'm trying to get to is you don't just want to get the reps in, you want to make sure you're good at getting good reps in, okay? So all reps or not good reps, you want to get in good reps, okay? And the deliberate practice sort of dovetails into this. So if you have time, read this article on my website. I've done plenty of presentations on it too. You can probably find them on YouTube, youtube.com/Dave Landry. And this is what I was talking about when it comes to deliberate practice about Malcolm Gladwell, and a lot of his research comes from Erickson. Now, Erickson and Gladwell have a little bit of a riff because Erickson seems to think that Gladwell says, oh, you just need 10,000 hours. And if you read, I think it's Blink, I'm almost positive it's Blink. If you read Blink, he talks about the fact that if you banged on a piano for 10,000 hours, you would not become Mozart, okay? So it does take deliberate practice. So I think these two are actually closer than they think as far as being in agreement, okay? So again, study deliberate practice. Now, just real quick, I just want to show you Landry light pullbacks. And the idea here is the great thing about this, I guess, is that this simple little pattern will help you to be able to identify and objectify setups, okay? So you always want to start with something simple and build from there, not just the opposite. And some writings I've done recently, and let's see if I could sum it up. I've met some people in my world travels that are doing things that are far more sophisticated and involve like bond arbitrage off of international bonds and things of that nature. And there's some people that, and I'm not saying this to brag, maybe a little, but there's some people like on TV who do options, okay, and other businesses within the industry have been started, and they started off by doing a lot of this trend following moron stuff. Now, what would the world be without hypothetical questions, said Mr. Wright. But one has to wonder if they tried to start with the complex, and they likely would not be, I don't think they could come out the gate and arbitrage bonds, right? Or trade complex option strategies. But if you start with something simple, like a Landry light pullback, and get the reps in, something easy to recognize, something that's somewhat objectifiable, okay? I'm not saying it should be mechanical, although in some cases, depending on your psychology, maybe you want something a little bit more mechanical. My friends who are mechanical traders, they think I'm more of a mechanical trader than I let on to be, because I'm always preaching 100% discretion. And I kind of think that they're more discretionary than they let on to be, because I think they have things that go in their system to where they might not take certain signals in certain conditions, or whatever the case may be. That's a whole nother ball of wax getting into all that. But the bottom line is keep it simple. And here's very simple rules. When you're looking at the setup, make sure you have persistency. In this case, you've got persistency. Ideally, acceleration. You have a little acceleration here, and so on and so forth. This is an older slide, but I'm just seeing a lot of the things that I look for are in the chart. So you want gaps and laps in the direction of the trend, not opposite to the setup, or in the setup for that matter, and opposite to the setup. And you want, above all, you want it to trade cleanly. So let's break that down. Let's talk about a good rep. Now, your warm up, so to speak, would be start with one well-researched pattern. I've told the story 1,000 times, and I'll probably tell 1,000 more times. I was talking with a trader buddy of mine many years ago, probably in 2000 or way back then. And he was telling me about this trade he put on, and it worked, and he was all excited about it. And I said, well, that's a kind of neat little pattern. I can't really wrap my head around it. I was thinking to myself, it doesn't really seem that conceptually correct, but it worked. You know, I know it worked. That's two dangerous words. And I'm like, well, that's kind of neat. How long have you been doing that? He goes, oh, I read about it this morning. So obviously he didn't have enough time from this morning to when he placed a trade later that morning to well research, or the pattern was not well researched, obviously. So don't take my word on anything, right? Okay, trust, but verify. Make sure you go in and do your own due diligence. I think the little Landry light pullbacks are just a wonderful, simple little pattern. And if that's all you did, I think you do fantastic. In the back of my head, I was thinking recently, I like maybe take the one pattern challenge, or forget what to call, you know, or maybe some come up with a better name for it or something, where all you do is trade Landry light pullbacks, and then I would have people do that, and we would look at each other's trades. I'd approve the trades if that's what they wanted ahead of time, and we'd see how we did with just that one pattern. I think I haven't fleshed it out, obviously, so that's something that I might want to consider. Anyway, so again, start with one well-researched pattern, and then you want to do your thorough analysis. Like I said, every night, or like I said, ad nauseam, I should say, every night I go through about 2,000 stocks, sometimes a little more, sometimes a little less, depending upon the market situation and then what the database is providing through the scans. And in doing that, I get a feel for what's happening within the market internally. So I then look at the sectors, and if there's a stock I like, I'll look at stocks within the sector, such as, let's say, like a gold stock. Well, look at the other gold stocks. And if they're trending, and ideally there's a lot other ones set up, two things. One, maybe I like one better that's also set up, okay, that I might have overlooked for whatever reason. Or two, I get the confirmation that I need. So ideally, you want as much confirmation as possible. And, you know, getting back to the overhead supply thing, if you got a setup and it's got a big old amount of overhead supply, yeah, it might plow through it like this market has done so far this time and several other times in history, as my client pointed out. But it's not a good idea to bet that way, because there's going to be some sort of resistance when it hits that overhead supply. You're much better off having clear air above your setups. But anyway, you want to leave no stone unturned. Now, keep in mind, and this is kind of another conversation altogether, but there will be times where you do all the analysis. For me, a lot lately, and this is clients are like, Dave, we're ready for some setups. I thought we're paying you to give me setups. I thought you'd give me one a day. It's like, or two a day or whatever. It's like, well, I'm not going to give you a setup when I don't think it's worth trading. Now, I will show, as I said earlier, some of these, I'm long a couple of stocks, like I said, that are outside the service, and they were shown in the Landry list. And that's if you want to, and I'll give you some ancillary ideas, like, okay, if you want to be aggressive, take a look at these. And sometimes I'll show one, and I'll say, okay, I like it, but you've got some overhead supply, and maybe that's far enough away to where you don't have to worry about it. But if there's nothing that to do, that it's never risk-free, but if there's nothing to do where I can't stack the odds in our favor, then I would suggest passing. And that's sometimes it's hard to do all that work and then walk away like, well, oh well. But if you do find one, again, you want persistency, acceleration, and all the other trend qualifiers that I'll have to talk about, like gaps and laps and direction of trend, Landry light, of course. And then above all, it has to trade cleanly. And as I've said 10,000 times, and probably say 10,000 times more, I get asked all the time about stocks that look like an electrocardiogram. It's like beep, 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 beep. It's like, no, you want something that looks like the stock I just showed. Now, you need to take the yeah test. Okay, as I say quite often, if you're looking at a stock and you have that yeah feeling, now it might take a little while to get to that blink type of feeling like Gladwell talks about, where you instantly know, bam, that's it. So when I'm scanning, it's like I'm like the rat going for cocaine. I used to use my fingers, but now my wrists are worn out. I've got elbow problems. I had one surgery here. And that's a whole nother story altogether. But now I have a foot pedal, so now I'm slapping that foot pedal like a speed metal drummer. I can't think of the guy's name, but anyway, I'm just slapping that foot pedal, and then all of a sudden it's like, oh, that looks good. And it's like sometimes I'll get excited, like, okay, there's my setup, and I'll hit flag, and I won't even look at it anymore during this initial scan. I'm like, okay, at least I got one, and then I'll just keep going, and then all of a sudden the best setups jump out at me. Now it takes a while doing that, okay. When I first started doing that, it took me hours to go through 2,000 charts. Now, if I'm uninterrupted, and mostly I do the interrupting myself, because I always tend to think of stuff at the end of the day that I wanted to do or want to look up or whatever, you know, my ADD kicks in. But if I stay focused, I could do that in less than 30 minutes. My goal is within 30 minutes of market close to have all my scanning done. Now, that's all my initial scanning. I do, from that scanning, I do have a momentum list, which right now is about 100 or 150 stocks. And then I had the Landry 100, which is 100, which kind of meshes in with those. So it's a subset. But anyway, so I do have a couple of hundred more stocks to look at a little bit more carefully, okay? And then I need to look at the indices and then look at the sectors and all. So all that takes at least another half an hour or so to get everything together and then to put together the trading plan. But the point I'm trying to make is once you have looked at enough charts, deliberate practice now, okay? Your deliberate practice is not banging on the keyboard or like a piano player banging on a keyboard. Deliberate practice is working to get better at what you do. So it does take practice, but it takes deliberate practice. So that's kind of a subject that kind of dovetails in with all this in the good reps. Now, the get ready phase is the planning phase, okay? Where are you going to enter? Where are you going to place your stop? The initial profit target, which is simply the entry minus the stop, okay? Add that to the entry for 50% profits should the market hit it, okay? The stock hit it. Your trailing stop process, which is, I kind of know it when I see it. If the stock moves up a few cents, I call that keep the change. I just leave the stop where it is, and it kind of gradually creeps wider over time doing that. The other one I do, the game that I play, and by the way, it's good to play a lot of these little games. The other game that I play is what I call gaining ground. So if I'm blessed with a 3-point jump in a stock, then I might only bring my stop up 2 points, okay? And that allows that stop to widen over time. So remember, I know I'm saying the same thing that I often say, but we're letting that stuff, there's going to be somebody new who's going to ask me, you let that stop gradually widen over time. You're changing hats from the trader to the longer term trend follower. If you are a longer term trend follower, as I preach quite often, you're going to be right about 28% of the time. So you're going to be wrong over 70% of the time. And your drawdown is going to be absolutely abysmal. And as I beat the dead horse, the turtles, not to be schadenfreude, but most of the turtles blew up after the program, okay? They weren't, or they certainly weren't as successful afterwards. The program, which Eckert and what's his name, Bill Dennis, Eckert or Dennis, decided they had a bet that you couldn't, that traders were made and not born, or born and not made, however, one took one side, one took the other. And they were looking at a vat of turtles somewhere in Singapore, Japan, wherever it was, where they were growing little turtles. So they were like, one said, oh, we can grow traders like turtles, and others said, no way. And so they put this program in, and it was incredibly successful. And I didn't mean to go off this tangent, but The Way of the Turtle by Curtis Faith, that's the only turtle book I read, and I read his second book too, so I guess 2 turtle books. But definitely read that book. But anyway, long story endless, even within the program, while the program was still alive, as I learned from Mr. Faith's book, somebody on the team figured out that they were risking way too much. And they immediately, I think, cut everybody's positions by at least half because they were risking too much. Now, they happen to be at the right place at the right time. And, maybe I'm a little jealous. Maybe I wish I'd have known about the program and I could have been a turtle. That'd have been great. But they were at the right place at the right time. And if you study all this trend following stuff and you fully understand it and you have a money management plan in place, then sooner or later, you're going to knock it out the park and you're going to print money. I can almost guarantee that, right? Because sooner or later, we're going to have another 1999 or something like that or whatever. You may not see my fat ass again if that happens again. That's one thing I learned 20-something years ago. But as long as you just chip away at it, chip away at it, get your reps in, eventually you're going to be there for the print money phase. That's a great phase, but it could also go to your head. And I've seen a lot of people do stupid things like tell a boss to F off or just leverage up and blow up during great times. And it's a really sad thing, but that's neither here or there. The bottom line is you want to get your reps in. Now, once you've done all your analysis, and I wish I had something eloquent to say about that, but the bottom line is most of your work is done ahead of time, okay? And one thing I would recommend would be the pre-mortem. We talk a lot about the post-mortem, which I will beat the dead horse on in just a few minutes, but the pre-mortem is where you sort of time travel. It's kind of back it up to the F yeah, okay, trade. And the so what test would be sort of your pre-mortem. So ask yourself, if this trade fails miserably, can I walk away and be okay and shout next and honestly say, you know what, if this trade fails miserably, and I saw the same exact thing, persistency, acceleration, a clean setup, a stock that trades cleanly too, blah, 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 then I would take it again. So anyway, you've got your plan in place. And of course, just trade the plan. Plan your trade, trade your plan. That's all you got to do. My work is done. I would drop a mic, but I've broken so many mics doing that. I need to get a cheap mic or a fake mic or whatever. Anyway, I trade a plan. So one thing you could do, you have to come up with some commitment devices to kind of protect you from you. And I would recommend possibly a hard stop entry on a position, or at the least set an alert. So what I will do, and I almost missed one a while back, and thank God my Facebook group pointed out, somebody in Facebook group pointed out that it triggered, and luckily it hadn't moved that far before I got in. So that's one advantage of having that Facebook group from a selfish standpoint. But if you are not going to watch the screen, and I would encourage you, if you're position trading, not to watch the screen. Yesterday, I think it was a TOI. I'm like, oh God, I'm all bummed out and depressed because I just got whacked horribly bad on it. I looked at the chart. I was like, well, you know, I'm not stopped out yet, so let's just follow the plan. And I'm not too far away from a profit target on that now, which would be really nice. So if we have a little ding, I'll be pretty excited in a second. But anyway, use a stop entry or set an alert. So that way you can go about your life and you'll get an alert on your phone like, bing, okay, I'm in the trade now, okay? Or at the least, and I meant to say this earlier, it's like I might set 2 or 3 alarms. Let's say my entry's at 25 and the stock's at like 23. I might set an alarm at 24, 24 and a half, and then one at 25. So it's kind of like, wake up, dummy. Maybe when it's at 24 and a half, I should go place a hard stop entry if I'm not going to sit there and wait for the next alert. Now, here's the thing. I had, and it's too soon to start kissing each other just yet on this one, but I had no idea that it would rally as much as it did today, this one stock. And I said, but you know what, Dave, you're going to be doing your webinar later. Just put in a limit order just in case it spikes up and hits that initial profit target. Now, it hasn't done it yet, but it might be close enough for me to think about getting out. Maybe after the webinar, I'll get out of half, but hopefully we'll get a little zing. I know I just said hope. But you can put a limit order in there, and this is the only time I usually recommend using a limit order, except for like options where you don't want to get stuck in the spread or whatever. You want to try to maybe get between the spread a little bit and give them a little piece so you can make sure you get in. But if you're taking partial profit, sometimes you get that spike up. In crypto, I love taking profits on limit orders because you get these big spikes in there. I can't tell you how many times I've had crypto spike up and not have an order in place to take advantage of, especially those shit coins, SHYT. So use a limit order. And I'm not a huge fan of limit orders, but every now and then, sometimes it's good to put one at your initial profit target, the IPT. And then here's the hard part. Do nothing unless there's something to do. Ken Lambert said doing nothing is harder than it looks. That's especially true for me after a couple hours of research and nothing to show for it, or looking at stocks all day long and then doing that intense analysis that I just talked about, because I'm looking at the Landry 100. I'm looking at IPOs. I'm looking at what's moving. I'm looking at my watch list and all these different things. So I'm looking at all these different stocks all day long, and then I do that hardcore analysis you talked about. And then to have nothing to do or show for it, that could be a little demoralizing. But that's a rep. That's not a trading rep, but that's a what's a good word for it? Analysis rep, which is important too. But anyway, doing nothing is harder than it looks. And you want to do nothing unless there is something to do. So that's, I repeated that one, but that's what you should do. Sometimes nothing. Trading is a lot of waiting. You're waiting for setups. You're waiting for entries on those setups, which may or may not happen. And the one that I almost missed, I waited like every day. I put in orders every day for like a week. And then on Monday I came in, or whatever day it was, and I forgot to put the order in. And then I saw in Facebook that they were talking about the stock that it triggered. Once stock triggers from the service, it's fair game to talk about. Anyway, so the rest, so to speak, after you did your rep would be the post-mortem. Now, if you have a losing trade, then you need to ask yourself a couple of questions. And actually, you'll probably know right away. How many times have you had a losing trade? And the second that you get that ding that you stopped out, you say, I knew I shouldn't have taken that trade. Okay, I'm guilty. Way more guilty, I'm willing to admit. But I'm not as bad as I used to be, but I'm still bad enough, right? So if you're doing that, then you had a bad rep, okay? That's not a good rep. So easier said than done, but start the whole damn process over and then make darn sure you're willing to live with yourself in the so what test. So if it loses, be willing to say so what or next. Now, if it wins, provided you did everything correctly during the warm-up phase, so to speak, then congratulate yourself. Annie Duke has talked about the fact that she's got a new book out. Excuse me, I haven't read it yet. I think it's about quitting, and trading is a lot of quit. What was that movie? He's got a lot of quit in him. That boy's got a lot of quit in him. I can't think of that movie. So I'm anxious to read it. I actually have it on audio, but it should be pretty good. But Thinking in Bets was a really good book. I tried her decisions workbook thing, and I was having a hard time getting into it. And I probably need to force myself through it. I don't work well with these workbook type of books. But anyway, trading is a lot of quitting, okay? And it's hard, especially if you're successful, because you become successful from quitting. But the bottom line, where I was going with the Annie Duke stuff was bad poker players attribute bad playing to bad luck and winning to skill. If you win because of luck, you really haven't won longer term. All you've done is taught yourself to trade badly or play bad poker. So again, if you immediately drop an F-bomb and say, I knew, then you had a bad rap. Now, it's okay to drop an F-bomb. I mean, I'm not going to drop it because it weighs about a pound and a half. But Mike Peterson was, a client of mine, was kind enough to send me an F-bomb. So it's okay to drop an F-bomb, but then say, okay, next. And this is where you go back to day one. You back that chart out. And what I should do is I should every time, this would be a great exercise. I'm glad I'm thinking about this. Every time from now on, every time I make a trade, I should capture the chart like that BCLI. I should capture the chart and then block out the name of the chart, okay? And then, or maybe have some kind of way where I can get the name back if I need it, and then go back and see what happens with the stocks, and say, okay, would I take this trade again tomorrow? And then if it didn't work, that'd be a good exercise to go back in time and do. So I would encourage you, every time you're thinking about taking a trade, take a snapshot of the chart and save it off, and then go back and look at it again. So what I like to do is back the chart up to where I got into the stock. And truth be told, I don't always do these things that I should do, but I don't always do that. Sometimes I'm pissed off when I get stopped out and just move on. But usually I will at least look back just briefly in the chart and see whether or not there's something there that I didn't see, because the whole game is psychological, as you probably know. And you're going to have a bias going in. You're going to have that, and I don't know if it's a cognitive bias, but you could have that excitement bias going into a trade. And there's a whole neurology just based on that. I was dreading an event not that long ago. I can't say what it is because it's going to throw several people under the bus. But the dreading of the event was far more worse than the event itself. And it's just kind of like you're excited to go do something, and then you finally get to do it, and you're like, well, that wasn't as great as I thought it would be. Well, that's human nature, okay? We kind of blow things up in our mind, good or bad. It's that anticipation neurology that's happening. And possibly there's probably some kind of cognitive bias, the intuition virus versus the intuition analogy or whatever from Jimmy Rogers. Anyway, long story endless. So you need to separate luck from skill. Make sure you're getting in the good reps. Otherwise, you're going to need rotator cuff surgery. All right, boy, Chief Orman really wound up today. Okay, I lost my YouTube people. Let me see if I can get them back here. And then we're going to switch over to quick crypto. And if there's any pairs you want me to look at, let me know now. We'll do crypto and then we'll pop into stocks real quick. Also, let me know if there's any stock. There we go. We're back up. All right, let me see what's going on. Oh, we got some YouTube peeps. Okay, any questions on YouTube, let me know. Sorry, I lost the feed for a second, but I'm back. All right, let me shift gears. Let's go to take a look at crypto real quick. All right, Bitcoin. Bitcoin has plowed through overhead supply. Okay, so maybe overhead supply doesn't work anymore. Well, we're not through it yet, right? We still got a ways to go. For me to get excited about Bitcoin, it would actually have to make all-time highs. Now, we do have lots of Landry light. We do have bow tie proper order. So if we were to take a look at that real quick, maybe it's a margin call lock you out. Yeah, if you have a margin call, don't answer it, huh? That's funny. All right, so we take a look at Bitcoin. Like I just said, lots of Landry light, okay? 25 days. It's been 25 days since we touched the 30 EMA, so that's a good thing, right? And let's take a look at the bow ties real quick. We'll take a look at the proper order, okay? So proper order means that for uptrends, 10's greater than 20, greater than 30, okay? 10, 20, 30 up here, you can see. Simple, exponential, exponential, okay? Notice the bow tie here, pretty big slide out of it. That's kind of cool, just noticing that. I mean, I knew it was in downstream proper order, but I didn't notice the actual bow tie setup in and of itself. So the trigger would have been higher high, higher low. Trigger would have been right there on that. You can see it retrace a little bit before it imploded. And now it's looking better and better and better, and not too much overhead supply to deal with. We're almost there. I'd like to see us get there and stay there. These high-level V-shaped recoveries are hard to sustain. Like I said in the weekly charts, the market in a minute earlier today, it's hard to run a marathon after you have ran a marathon. But anyway, Bitcoin certainly improving. Ethereum has woken up quite a bit as of late. Lots of Landry like there. It's got its work cut out for it. Overhead supply here, overhead supply here, overhead supply here, and then a little bit more way back here. So it's going to take, no, there's no guarantees, obviously, but it's going to be really hard for it to get through all that. Now, if you have any individual pairs you want me to take a look at, just let me know while we're here. Sometimes, and now's probably not the best time, but sometimes you can just come in here and buy the strongest ones. And this would be a good example of that, MNDE, although it does have a lot of long tails, so it might be too thin for trading. And ideally, when you're buying the strongest ones, you want to be up in clear air or not have any overhead supply for a while. But the cool thing about, and I didn't talk about it earlier, but the cool thing about the shit coins is if you're trading stocks and you're getting those reps in, one thing I left out is you need to get reps in during a bull market, reps in during a bear market, and reps in during a choppy market, okay? All three of those cycles might take a long time. With these shit coins, that might happen over a week or a couple days, okay? So here's an example of just kind of buying new highs. These are kind of going straight up. I'll show you which ones I'm long and why I bought them and when. This B and T I bought right here. Yeah, it had some overhead supply. Okay, I'm guilty. But it was kind of going straight up, and I figured it was worth a shot. So I bought it here. Initial profit target was here. Jazz, whatever they call this one. I just like the way it was kind of breaking out. Okay. And it did have some overhead supply. So these aren't perfect, especially in hindsight. Now I'm looking at them. This one did not work out. This PYTH. Okay. You see, it took off. They came right back in. Now I'm not telling you to throw caution to the wind and just buy these things that are going up. But when most of them are moving and Bitcoin itself is doing okay as your bellwether, then sometimes you can just play the relative strength game. I'm not a huge fan of relative strength unless we're in a rip-roaring bull market like 1999 in stocks, at least. All right, no questions on crypto. But yeah, crypto could be a really good place to get the reps in when it comes to trading fairly quickly. Now, don't bet the farm. You know, if you're new to trading, put a couple $1,000s in a crypto account, risk $25 a setup, okay? And just take your time with that. And of course, talk to your financial advisor, which will tell you not to do it. Look at the P's. You know, maybe this overhead supply doesn't matter anymore. Who knows? Okay. You got to be careful though, because markets can be a bad teacher. And all of my aforementioned buddies in the gym right now are thinking that, oh man, I'm glad I hung on. And that was a couple of years ago. Actually, it was 6 years ago. I was renting a U-Haul because we were moving to where we are now. And the guy was watching CNBC, and I said, "Oh, you trade the markets, huh?" And he wasn't interested in me or what I had to say, so I didn't say much. And he goes, "It's with that January. We had that January spill. I forget which year that was. I guess it was 2019, maybe." Anyway, it looks something like this chart right here, and he's like, "Man, I'm glad I held on. I wish I'd have bought more when it was down 15%." And I'm thinking like, oh, geez, that will work until it don't. So the market is a bad teacher. But hey, you know what? So far, I'm not going to argue with it. I'm trying to find more, right? My big problem is, again, it's hard to run a marathon after you have ran a marathon or have run a marathon. If somebody could explain to me run, ran, and have run and all that, that would be great someday. But anyway, P's are having a decent day. Opening gap reversal, okay. Outside day up, pushing it to his overhead supply. Before I forget, let's take a look at the VIX. Now, let me see if I could sum this up quickly, because I know we're running late. When the VIX gets stretched 10% or more away from the moving average, look for reversion to the mean. Up in VIX, okay, if it stretches downside, and down in stocks. And the other thing I'm noticing here, and this is why I love teaching, just by accident, on a closing basis, the S&P 500 looks like it's lost a little steam, huh? I don't know. So I would expect a correction in here based on the VIX action, based on the overbought nature of the market, and based on the overhead supply. That hasn't happened yet. I wouldn't bet on that by taking a position. But what I would do, and what I have been doing with mixed results over the last several days, is I would consider possibly buying the VIX and or shorting futures or buying SPXS if it's in a retirement account or whatever, to possibly ride that correction out intraday. Okay, I would not take a position trade based on that, because this is a short-term system. This VIX stuff that I do, it's short-term systems. And a few years ago, I went back and it's like, hey, this stuff's really working. Why did I forget about this VIX stuff? And then so I did the mechanical testing, and then all of a sudden the pandemic hit. It was printing money, and then the pandemic hit, and it's like, oh, that's why it stopped working, so to speak, on a position basis. But on an intraday basis, I think it's okay to go in and trade these kind of things. And also, obviously, you see a spike like this, where you're stretched 100 or 200% away from the moving average, you know that that could be a panic bottom. Not necessarily the bottom, but a panic bottom, and maybe it's a time to nibble. Although I will tell you this, volatility is so crazy during those times that you're going to have to take a tiny position because it's going to be very dangerous to trade. But anyway, let's get back to some of these other areas. NASDAQ composite doing pretty darn good too. Again, outside day up, pushing, you guessed it, it's an overhead supply. And again, think about this though. If this market, by the time this market's all the way back here, it's going to be really hard for it to keep on keeping on. Stranger things have happened, but it could be tough. EVA shares, kind of a decent idea of what's happening there. You can see stalled out yesterday, but they have lost some of their momentum as of late because this is pretty much straight up. And then now they're starting to kind of drift a little bit in here. I wouldn't rush out and buy them, certainly, but this is going to be hard to sustain. Stranger things have happened, I know. Whatever the market does is whatever the market's doing. I need to write that down. But the EVA shares have improved quite a bit, so the rest of the world's doing better than us for a change. Take a look at GLD. Nice little bounce today. So far, its uptrend remains intact. Look at the Landry light above the 50 simple moving average. And so far, it looks like it's trying to resume that longer term downtrend. Gold stocks are looking not quite as good as golds. Keep in mind that the gold stocks are leveraged, so they should move in somewhat more of an exacerbated fashion than the underlying commodity, okay? Now, a lot of areas are improving, but some areas not so much. Biotech still looks ugly at best. You can see we sold off fairly hard out of a pullback. This is IBB. Major drugs have been taken in on the chin as of late. So far, selling off out of a pullback. So that's an ugly looking area. Russell 2000, before I forget, it has worked its way higher, but it has a bit of what I call a witch hat look to it. And that's where you have a sharp accelerated sell off like we had here, followed by a quick retrace, and then it hits a little resistance at the prior peak. So that's actually a little bearish longer term. If we could get above the 200, which is also, you guessed it, right around where the overhead supply is, that would certainly be, and obviously be, a good thing. Software and many other areas have come back with a vengeance. Let's just see if they can go on and make new highs before getting too excited. Semiconductors have been on a tear as of late, and they've plowed through this overhead supply like butter. Now, I wouldn't buy them because they've got all this overhead supply. I'd be very patient in doing that. I think you have to have a set of rules, so to speak, things you will do, things you won't do when it comes to the markets. Still laughing about the margin call. Bonds, bonds have been kind of ugly. Again, there's that word hope, but hopefully these lows hold. I'd like to see bonds just bottom out, even if it takes a while, and then obviously begin to rally from there. Most sectors have been improving. A couple sectors are kind of wide and loose and all over the place and still questionable, like the energies, but although they've been improving, I'd be really careful there. Financials almost all the way back to their prior highs, so far so good there. But again, it's going to be very hard for this market to sustain this rally, but let's just see what happens, okay? I hope it goes straight up. I don't mind getting stopped out of my shorts, ideally at a profit, if the market turns around and goes straight back up. Okay, I know the crowd's a little smaller today because we had trouble early on, but if anybody, the few of you that did make it, and I appreciate you being here, I really do. Is there any stocks you guys want me to look at real quick? I know in Facebook we talk about them quite often. IPOs are something where I've been starting to pay attention again, and I shouldn't admit that. I should always be paying attention, but I've been paying more and more attention lately. And I'm waiting for some of these IPOs. Some of them are really taking off, but some of them not so much. So let me just go through those real quick while we're waiting to see if anybody wants to talk about anything. So at the least, I would go through these and make your momentum lists. Now's the time to maybe start paying attention to IPOs again. The other thing too is, and sometimes even the market is overbought, these super speculative stocks can do quite well in spite of the market. Okay, going once, going twice. Well, obviously I want to thank all you guys and girls for attending today. I appreciate you patience while I was getting this show up and running. anything unanswered, you can shoot me an email, david@landry.com, or contact me through all that other stuff, or see the links below. And if you're watching a recording on YouTube, to my Facebook group, I'll see you guys in a few minutes. Everybody else, have a good weekend, and hopefully see you again next Thursday. And may the trend be with you. Thank you so much. You're welcome.